Hey, everybody. Thanks for joining us. Today, we have another CRMP. I'm very excited about this conversation. This is insight that is typically held in like a little black box. You don't usually get to talk to somebody like this. So, today we have Kelly Sclafani on with us, another CRMP. And Kelly has a unique background we're going to go into. But, Kelly, if you wouldn't mind just introducing yourself to our audience, and then we'll get into some questions.
Yeah, sure. So I'm Kelly Sclafani. I've been in reverse mortgages for the last 14 years. I've been in processing, closed loan sales, underwriting, and most recently I was the credit risk manager at American Advisors Group.
That's a deep knowledge. A lot of you guys hear from loan officers, but this is the person who actually gets the loans through or not. Okay, so Kelly, tell us a little bit. You do have your CRMP, and that's kind of how we connected.
Right.
Can you kind of tell us why you got your CRMP and how it affects you in your business?
Yeah. Honestly, I went for the CRMP shortly after I was in underwriting. I had met my 3 to 5 years in operations. And I think since I got into the reverse mortgage industry, NERMLA just had this holy grail aura to it. So I knew CRMP is just such a high designation, very distinguished role in our industry. So I knew that I wanted that because it meant that I would be one of the leading experts in reverse mortgage, and I'm very competitive with myself. So that's kind of what drove me there.
That's awesome. I can relate to that, especially because you're a younger face. For me too, that was an important thing is, okay, I might be young, but I know what I'm talking about. So let me get this pin and designation to prove it.
Right.
And it truly is a hard test. Can you
Yeah.
kind of give us some insight into your experience with the studying process and how you were able to actually pass it?
Yeah. So I did have a bit of a disadvantage as a lot of it is sales based or sales focused. I basically studied all of the heck of mortgagee letters. And so just starting from the ones from 1988 and just all the active ones, just reading upwards. I did have to take it twice because the first time I just couldn't get enough of those sales questions. But I went back, I attended more courses, I went into a couple of sales trainings at my company, and then got more comfortable with it and passed the second time.
Nice work. Which that test has like a 25% pass rate. It is difficult.
Yeah.
And for us on the originating side as a loan officer, we're baffled by the other stuff. We're like, wait, I have to know the internal, I mean, you have to know the guidelines well, the mortgagee letters.
Yeah.
That's very dry reading for anybody. It's like there's a lot of them and it's kind of legalese. It's interesting to try to interpret that information into action, let alone study that many of them. So my hat's off to you on that. But the test really is cool because it covers so many aspects of reverse. It's not just like an ops person can pass it with their knowledge, or it's just not like a salesperson can pass it with their knowledge. It's so holistic.
Yes.
Some of the questions on there, I was just stunned by. Like I'm a studier. I'd imagine you probably are too.
Mhm.
And I hate saying this on camera, but it's true. I barely passed. I went into the test thinking I'm going to be mad I overstudied. I devoted a month and then the last 3 days, like morning till night, studying this stuff. And I walked into that test thinking I'd be so mad that I wasted so much time. And I just passed by one question. So not passing once, twice, 3 times, 4 times, I've seen it. So if you got it done the second time, that's
Yeah.
awesome.
I actually went through NMLS safe training a few years ago in 2020, and I did much better on that test, believe it or not.
Yes. I do believe it. I do believe it, which is why I think the CRMP is such an important designation. I was a realtor at one time, and there's a lot of realtor designations, and nothing against them. But for me, it wasn't particularly difficult to get any of those designations. You take the studying, you pass the little test that related exactly to the coursework. And for those of you who don't know, there's no study guide for CRMP. They're like, good luck. And they tell you how much of the test is based on what topics, and that's about all you get. And so you ask your friends in the industry, and that's what they say, "Study the mortgagee letters." Ooh, it's a lot. Okay, so now that we've talked about, what the designation is, how do you think that helps in your career when you've done so many different functions? Pick one, I guess, or all.
So mostly by the time I took the CRMP test and went for the designation, I was really in a credit role of building guidelines and answering sales questions. So it gave me that different side of what are they looking at? What is sales looking at? And on one hand, being a CRMP means I take continuing education courses every year. And I can't repeat those within 3 years, as you know. So I'm constantly relearning different aspects of the reverse mortgage product. And a lot of those are sales focused. So I'm seeing that side of the guidelines. And then we have our monthly CRMP committee calls, and being on those, I get to hear what sales is seeing in the industry. And it helps me when we're looking at changing overlays or how we're interpreting guidelines. It really helps me get that focus of how is this going to impact sales?
That's huge. That's really cool insight. I'm so glad you're on the calls listening for that stuff.
Yeah.
Okay, so I find it fascinating. You've been a credit risk manager, but also a DE underwriter. Can you
Yes.
kind of go into what that is and what your job was on a reverse mortgage?
Yeah. So DE underwriter that's the person who approves or denies your loan. So a lot of it is going through a file for reverse mortgage. It's very heavily based on the collateral. So that's the appraisal. So learning how to read an appraisal and see where the risks are, and do we have a valid assertion of value.
Mhm.
Then I'm also looking at the credit and the income and all of that financial assessment stuff. So making sure that this loan is right for our customer. That's how I view underwriting. Is this loan right for the customer? Are we putting them in a better situation? And I guess I've gotten to take that stance more being in credit because I get to do more exceptions. So I have a little more room to really make sure that we're following the guidelines, but we're doing the right thing. And so if we're making exceptions to internal guidelines, that we're still doing what's best for the borrower. In underwriting, it was a lot of, I don't want to say black and white. There are some black and white rules, but everybody's going to read those differently. So I guess I took one of the, key things of CRMP is the ethics, and really took that ethical approach of this meets the guidelines, but something doesn't feel right. Something's off, and just really kind of being the cops of really scrubbing things and making sure everything makes sense and everything's accurate.
Yeah. I mean, that's the biggest important thing is that we're placing people into a sustainable solution,
Yes.
and you're the final call on that. I love the credit aspect that you brought up because sometimes when I'm coaching a forward loan officer, I will say, okay, it's not the same. I did forward mortgages for years. Have you been involved in the forward space before?
Not in this aspect, no.
Okay, so my experience with that, it's just my experience. I don't know how accurate this is, but it felt like the forward underwriters were looking to disqualify. There were hard stops, like you said, black and white.
Mhm.
620 credit score, 619, sorry, bye.
Right.
And I explained it to the forward loan officers of, hey, there's a lot more life events that happen in the retirement years. And it's my experience that the underwriters are more understanding. They have more heart. It's like, on the forward side, your credit doesn't qualify. And it's a stop. Bye. Sorry. See you when it does. On the reverse side, I feel like the underwriters and the credit risk managers, you specifically, have a heart. And I can feel that through our conversation, because it's seniors. We're all looking to help. And sometimes helping is by saying, hey, this isn't the solution. But
Right.
sometimes helping is looking at it by not black and white, but okay, you have a 619 credit score. For reverse, that doesn't really matter. But whatever that hard stop is, you're saying, okay, tell me a little bit more about the situation. And if they can document that, if they can explain what actually happened, it was a one-time event. That's my understanding. I'd actually love to hear it from you. You're the one who really makes the final call.
Yeah, one of the coolest things about reviewing from an underwriter perspective with kind of the sales knowledge is I can look at a credit report and see, hey, something happened in 2016. There's You're doing great. And then there's just a slew of bad credit. You missed some payments. It's been a few years, but it all started in 2016. What happened then? And I can sometimes help loan officers go back to their borrowers and say, and help them remember. Because you also have to realize our older borrowers, sometimes they don't remember what happened in 2016 because it's just such a small blip in such a big lifespan. But
Yeah.
sometimes just that little prompt of, oh, right, that was the year of the freeze. And we had a huge water heater bill and then it broke and we had to replace the water heater. Not, life or death, but, not that significant, but still a big difference in their financial picture. And that can offset people for years. I mean, maybe they were living on savings and then that started to run out. And there's always a story. And sometimes that story is this person's not good at managing their finances and would really benefit from a life expectancy set aside, a Lisa. And sometimes it's changing that conversation with sales of sell them on the Lisa. This is going to be good for them.
Yes. Yes. I actually love that you said that. Sell them on the Lisa. I coach to that.
Yeah.
The Lisa's such a protective measure for so many people. If everybody could fit a Lisa, not every file is going to be able to fit it because
Right.
it's this large. If you guys don't know what that is, watch my other videos. We talk about Lisas, but it's this large thing that makes sometimes the loan amount not work. And so when that happens, and we kind of have up against a wall, saying, "Okay, can we get around this?" But
Mhm.
when it fits, I tell the loan officers, sell them on it from the beginning. If you already heard that they have some sort of credit damage, tell them, okay, we can get this wrapped in. Would you like to have your property taxes and homeowners insurance covered with this?
Right.
And when you ask that question, a lot of the time they go, huh, yeah. And then it makes your life easier, right? Because you're not trying to figure out, okay, how do I not have a lease on this file? It makes my life easier and it protects the borrower in big ways.
Right.
They don't have as much cash in the initial phase typically, but
Mm.
gosh, they're going to spend that money on taxes and insurance anyways. Might as well have it
Right, and you can
covered.
also see that savings, and they're already spending money monthly on their taxes and insurance, or annually anyway. What
Yeah.
does having that back in their pocket give them?
Yes. Absolutely. And it grows. I mean, the cool thing that I found when I didn't understand the Lisa at first was that the Lisa actually has a growth rate. So can you put aside a little bit of money now and have it grow to cover those increasing expenses? Because we can be sure of one thing, property taxes and death.
Right.
And property taxes go up. And typically homeowners insurance does too. So
Right.
having that built in, I think is just amazing. All right, I have so many questions for you. But to make it a little more fun, can you give us one of the craziest scenarios that you saw that either did or didn't go through?
Um, I can give you one. Yes.
Yeah.
I had a borrower, um, I had a borrower who was actually facing foreclosure. And this was a stretch file. This is by no means the norm. It was actually given to me to underwrite as a credit manager because I have my DE and they didn't want anybody on the floor having to make this decision.
Wow, no kidding.
I was able to justify not applying a Lisa to that loan.
And therefore they could get the loan, otherwise it wasn't going to work.
Correct. Right. So if they had a Lisa, they would owe money at closing and they just didn't have that. So this was a woman who, I don't remember what the life events were. I think her husband passed and then she was living off savings and that dwindled. So a snapshot of the credit didn't look good. She was in foreclosure. But what I was able to do was look at how the HECM was going to solve that problem. How with the HECM funds, she was going to not only save her home from foreclosure, but also dig herself out of that debt. And I was able to prove it as a sustainable solution. And that was just one of the coolest things I got to do as, credit manager, is find these creative solutions when it's what's right for the borrower.
Well, and I just got chills because I'm like, oh my gosh, as a loan officer, knowing that you're looking at my client's file with as much care and dedication as I do,
Mhm.
even without having spoken to them. Because
Yeah.
sometimes it feels like, well, I'm the one speaking to them. I know how dire this is,
Yeah.
but you're actually fighting for the client too.
Mhm.
Oh, that one's pretty cool. That's got to make you feel good at night. All right. So I got some other questions. You said you had experience in fraud prevention.
Yes.
So what's the most common ways people do fraud with reverse mortgages?
So usually with reverse mortgages, what we're seeing more is along the lines of elder abuse. So it's really people are coercing a borrower into taking a reverse mortgage so that they can then get hold of the funds and misuse it. We have a lot of borrowers who um, are prey to different types of scams where they think they're befriending somebody and that person is defrauding them out of money.
And they're using the reverse mortgage to get them that money?
Yes.
Oh,
Um, it varies from there. We also have a lot of identity misrepresentation. So somebody's signing for the borrower, and then we find out the borrower is incapacitated and they can't sign. So who's signing this as the borrower?
and who is it typically doing those things?
It's usually a family member. Honestly, sometimes it's a well-meaning family member who they didn't get the power of attorney set up in time. They don't realize that conservatorship is an option,
Mm.
and they just want to get their mom this money or whoever. Um, Sometimes we have had uh, loan officers who, just want to get this loan through, so they just throw a signature on a disclosure, and that's just not okay. We can't
Yeah,
do
that's not
that.
okay at all. It's your license.
Yeah.
Wow, the penalties for a loan officer doing that's shocking to me. See, and there again, that's why the CRMP is important. We have an ethics code that we sign to.
Yes.
Again, I know I preach all the time, but it's really important to work with someone who knows what they're doing and a CRMP who has an ethics standard because, I remember the file that I had to send to go get a conservatorship. And it was devastating. It took like 7 months to finally get this thing,
Yeah.
but they did it. They came back, we finished their file, and they were able to pay. I mean, this was a proprietary jumbo.
Yeah.
And, it's funny sometimes people in HECM, they think, oh, proprietary and jumbo is the wealthy. They have the same problems. Their standard of living is typically a little bit higher. So
Mhm.
the care facility that they needed to pay for the wife was 16,000 a month.
Oh my goodness.
And yes, the house was in the millions, but my gosh, at 16,000 a month, that would have
Yeah.
eaten the entire thing quickly for their portfolio.
Mhm.
Instead, they looked to the house, thank God. And it worked. They were both a bit older, so they weren't expecting to have this bill for an extremely long time. But just situations like that, it is a bummer to have to send somebody and say, I'm sorry, but you got to go to a conservatorship.
Yeah.
But it's possible. At
Right.
least it's still possible.
And it also adds that layer of knowing that we're doing the right thing, knowing that we're doing this correctly, and that it's truly what's best for the borrower, because you do have those extra layers of making sure everything's right when you go through conservatorship. But yes, I know that the timing is painful.
Yes, it is. Okay, I do want to ask you a couple things on credit. I don't typically talk about qualifying things, but can you kind of go into a reverse mortgage borrower, how their credit needs to look? I know it's quite a bit different from the forward side and from their last loans.
Yeah. So for reverse mortgage, we have our credit history. So satisfactory credit is determined by the last 2 years. So we're looking back for, I never remember this off the top of my head, but we're looking that there are no 90-day lates on 90-day lates on revolving in, I think, the last 2 years.
I didn't mean to quiz you on
No,
the
it's
definition of
okay.
derogatory. Just in general, it's like,
But
we don't have FICO
those
requirements.
are some black and white rules of like, you need to have you need to have clean credit in the last 24 months. So a 30-day late on a revolving account, like a credit card, that won't count against you. But if you let that run for 3 months and now it's a 90-day late, that will. However, with all of credit, we are looking for major derogatory events, so charge-offs, collections. And we do have to explain those even regardless of how old they are. But really what we're looking for is the overall picture. Is this somebody who just ignores bills sometimes, forgets bills? It happens. But we also want to make sure that if that's their pattern, we don't want to set them up to fail by making them responsible for tax and insurance. Now we also look at if there's a pattern of those lates, so they all fall within the same general time frame, no lates before, no lates after. We do look at extenuating circumstances. So we consider that as an event that caused an increase in expenses or a decrease in income, or both, that triggered this negative credit. And like I was saying earlier, it doesn't have to be an immediate cause and effect. It could be over time, but we need that explanation. And then with an extenuating circumstance, in order to not apply a lease, so we need documentation to support that. So in my example with the water heater, we would take the bills of replacing it and the heating bills, stuff like that would document that this is what really happened.
Yeah, and as long as it's documented, it's surprising to me the things that have gone through. I had a client one time, in my head, I always thought it was like death certificate, divorce decree, sale of a property, these really big legal documents. I was really shocked one time when I just kind of said, okay, let's try it. The event was that they lost, and this was a couple who didn't have kids. So they lost all 3 of their dogs within the span of like 2 months.
Oh, wow.
And they personally lost a lot of weight because of it. Like they were just devastated. And the vet bills were crazy high trying to save the dogs' lives, and they passed anyways.
Yeah.
We were able to document that and show that truly this was a one-time event. This is not going to happen again. And we were able to get through it.
Yeah. Yeah. And that's the other thing is we need, reasonable assurance that it won't happen again. Obviously, we can't predict the future, but we want to make sure that, again, that we're just setting them up for success.
Right. There's a difference between that couple and the guy who goes, I don't know, I eventually paid it. What do they care?
Yes.
Well, they care. Okay, let's go into that. Why is it that we care so much?
Yeah. So it goes into risk layering. So if somebody's late consistently on different bills on credit, so, they pay their car payment 2 months late just because they didn't feel like it or didn't think of it. And they, let this credit card go to charge off because it was cheaper that way. And, if we see a pattern there, it is more likely that they're going to have a pattern with tax and insurance. And even if their 24-month look back on tax and insurance looks good, we still don't know that they won't default to this pattern of behavior with credit and move that into their property charges. And similar to what you're saying, I've had borrowers who stopped paying their HOA dues because they didn't like the president.
I've had that too.
So
I had that too. We got in a fight, so I haven't paid my HOA for a year.
yeah.
It's going to be tough for me to help with that.
So it kind of goes with like, if your kind of thought process is, I'm not going to pay my car payment for 2 months just because It's just more likely
Right. And for our audience who
going to
doesn't
show up in property
understand,
taxes.
why is it so important that they pay their property taxes and insurance? Because those are the two
Oh,
expenses we have to make sure they're going to pay.
yeah. So those two things, if you don't pay your property taxes or your insurance, well, if you don't pay your property taxes, the state can take your home. I mean,
Right. Regardless if there's
process.
a mortgage on it
Right.
or
They
reverse, like
can
they want their
put you
money.
into foreclosure. State doesn't like not getting money. Exactly. As for insurance, this loan is based on your home. All of this is going into the value of your home. So one of the requirements in the security instrument you sign at the end is that you're going to maintain your home. You're going to keep up with repairs, and you're going to keep insurance because, God forbid a disaster comes through. We need to know that your house is going to be covered because, and I can go down a rabbit hole with how far this extends, but if your home is lost, if it burns down and you missed insurance payments, so they're not covering it. Well, now, not only did the lender lose out on that loan, but it's actually covered by HUD insurance. So now HUD is covering the difference in value. And what happens there is, and that eats at the MMI fund, which puts the whole industry at jeopardy, because if HUD sees that we're constantly losing money with reverse mortgages, they may decide reverse mortgages aren't a good idea. So it's a small thing, but it has impact downstream, and especially as if it builds up.
Absolutely. Well, and the cool part, I mean, cool or, interesting maybe is the right word, is that the reverse mortgage doesn't even show up on people's credit report.
Right.
That's how much the house is the collateral.
Yeah.
And while you still are the owner, I think people have misconception about that, oh, the bank owns my house. No, they don't. This is just a financing instrument and it's collateralized by that property.
Right.
So just like what you're saying, if something were to happen, and that puts the whole program in jeopardy. And I go to sleep sometimes at night thinking, oh, I hope I don't wake up tomorrow and they decided the program's no good. God forbid, but in the years where the MMI fund has drained, we all kind of hold our breath because it's such an important program. But it's not like people say, oh, mortgage insurance. It's not like that mortgage insurance actually covers all that much.
Mm-hmm.
It doesn't cover, it definitely isn't built to replace the entire value of a home if there was no home insurance.
Right.
Crazy, crazy stuff. All right. Well, I like to keep these videos a little bit shorter. So if there's any insight, into your world that you want to share with the customers that I haven't asked about, I'd love for you just to go into that before we wrap it up.
I think the only thing I can think of sharing is, if you're the borrower, we know you have a story to tell. If your, credit report has some bumps, if something isn't perfect, if your file isn't perfect, just tell us about it. Borrowers have the opportunity to write letters of explanation for different parts of the file. Always take that opportunity to tell us the whole story. Tell us what happened, how it affected things, and why it won't happen again. Just, you have a story. The more you tell it, the easier it is for us to make that loan work.
Thank you for saying that. That I think is much needed for the industry to hear. I mean, loan officers sometimes themselves don't even ask, well, what happened? They just go, oh, that doesn't work. And it's like, oh, it might work.
Yeah.
Well, you guys heard it here first from a DE underwriter, a CRMP, and credit risk manager. Thank you so much for taking your time out of your day to be on with us today, Kelly.
Thank you, Christina.
All right. Bye, everybody. Have a good week.